Good morning, Armor Insiders. Thanks for joining me this morning and getting your day started. We're going to go over oddity in a minute because that is a classic chart pattern. You're going to want to freeze that frame, print it up, put it above your desk. We're going to go over our virtual hedge fund. You're a portfolio manager on the desk. You've got your tranche capital. I've got mine. We're working together, sharing information, making us all better. But at the end of the day, you've got to figure out your risk tolerance, goal, strategy, and be the smart money. A couple of thoughts. NVIDIA. This is a stage 4 base, and it's struggling to break out as expected. So it got crushed down to the 50-day moving average and the support yesterday on NVIDIA. Let me be clear. I've been saying this for a while. I expect that to fail. Stage 4 bases fail. It doesn't mean that I'm saying NVIDIA has to crash. I'm just saying a whole new structure has to form. Could be ultimately a cup and handle. So there's the cup, then it comes down to this white line, the 200-day moving average, and then starts to curl back up, and you have a whole new base. And you start counting fresh. This will end up being stage number 1 of a whole new expression. But right now, this is just too much for one asset, and it needs time to do something different. And that's just classic stage 4 base failure right there. What I find interesting is that it's not hitting SOXX. And so that tells me perhaps two things. Number one, it's not crushing SOXX. If that that's a head and shoulders. If that doesn't break down, but NVIDIA comes down a bit, that sounds like just rotation inside of semiconductors. The AI story is great. Semiconductors are necessary. They're in demand, and they're just taking some out of NVIDIA, which means NVIDIA is not going to crater. It's just going to kind of do like this and underperform for a while it sets up a bigger base for the next launch pad if you're a believer in NVIDIA. And in the meantime, maybe money comes into other semi stocks. I don't know about that. I mean, this is just one day or 3 days. I mean, NVIDIA's down for 3 days and semis are up for 3 days. So I'm watching that closely. I'm very curious how that's going to end up playing out. Let's talk about Tesla for a minute. I reduced my exposure to Tesla here. And I love the story. We bought it, election night. It blew out. I love the chart pattern. And then it had that reversal yesterday. And I'm wondering if I shouldn't just book my gain completely in Tesla right now. It's a political football. So I think that profits can be probably booked. If I wanted to just swing trade this position, I'd book my entire gain on that reversal yesterday. But I'm going to trade around a core position. That's the commitment I'm making, and I'm going to do it. So I've got to stop in there a little bit below 300, reduce the size up here, trade around the core just like we did IBM. As it comes down, find support, reverses, add more to it. I think I want to own it long term, so I'm going to trade around the core. But if somebody said to me, I just want to swing trade, then I'd say I'd be out of it right now. That was just a perfect reversal. Earnings tonight. Alert, alert, alert. CrowdStrike earnings tonight. So, two thoughts come to mind. The first thought is you got to manage risk. You never know what's going to happen on an earnings announcement. Could be a total collapse. People don't like the number, whatever. Could blow out to new highs. I have no idea. So you have to just manage risk. Look at the portfolio. What's the size versus your portfolio? How big is your position? Can you accept the risk? Sometimes I ask myself, worst case scenario, disaster, stock drops 50%. What would that do to my net worth? How about, even if that's not fair, 50% is kind of crazy. How about 20%? Like a really bad earnings announcement drops the stock 20% usually. How would that make you feel? If you feel like you're going to throw up because of that and your position's too big. So pair it to a position where you could just handle the swings and you can always re-up and make for a larger trade. The flip side is you got to be in it to win it, right? You can't just sell the position that's going to announce earnings. I mean, think of blowout, run 25%. So you have to find the position where you can handle that volatility into earnings and then live with it. Okay, so there you go. The other way to go about it is to own bug, right? You could not own the individual names, and you could own the ETF, and then you won't make as much, but you don't have to, live on a razor's edge of earnings announcements. I've been looking for an entry into Ford, so I took a half position there as it closed in the green box. I want to see how it behaves. I want to double it at some point. I start with a half position on these Armor Invest ideas. I call it a half position. It's an average position. An average position is the half. Sometimes I double it. Sometimes I just live with a half, and I'm happy with that. I'm going to have 10 to 15 names in my Armor Invest portfolio when I'm fully invested. Sometimes it's 10, sometimes it's 15, depending on how big I want to make them. So I've got a piece on of Ford, and I have a piece on of ALB. Okay. And I'm looking to increase the size there. The time to own lithium is when nobody wants to talk about lithium. To add Uber back to my off the record portfolio, this is where you have to buy Uber. Right on that uptrend. For some strange reason, Uber recently has been like the anti-Tesla. I just think it's a ridiculous narrative. I don't think Tesla is going to unseat Uber in its business model because there might be a robo-taxi. It's just stupid. So whatever. I'm not going to argue with the market. I don't own it, right? I'm not arguing with the market, right? We had a position on, I took it out, it went lower. But it's put in a perfect reversal at the 200-day moving average in the uptrend. So it's off the record right now, but if it hits that green box, I'm going to own that everywhere. And I'm also toying with getting Doximity back in my portfolio. So I've got a starter position in the off the record portfolio. I want to see if the 25-day moving average holds and really this Fibonacci retracement holds. Stock jumped 40% because they had a major, they hit that inflection point in AI driving their business. And I think it's a really big stock. And so I don't know if this is a blow off and it's over, or am I looking a gift horse in the mouth? Because when it was up 40%, I couldn't believe I didn't own it, right? I made some money and it sold it before earnings and it blew out. Okay. Now it's come all the way back to the 25-day. It should hold the 25-day. If it closes the entire gap, then I'm missing something. I'm not going to hold it. But if it holds a 25-day, I want to put on a position in here. So I'm toying with that in my off the record portfolio. Those were the additions. Let's wrap up with a quick review. And this is where you want to grab a pen, piece of paper. You want to screenshot this. You want to put it on your put it above your desk. Put it, maybe you want to frame it because you're not going to see a better pattern than this. Okay. So there's candlestick charting that we're going to go over. But first, the basic chart pattern here is a classic wedge. It's one of my favorite chart patterns. You hear me talk about it all the time. Let's remember what chart patterns are. They're just showing us they're graphic representation of the battle between buyers and sellers. And so when you have lower highs, it means the sellers were faster to sell, right? And when you have higher lows, the buyers were more aggressive to buy. And so when that comes to a head, you get a break one way or the other, and it's usually aggressive because it's a battle between buyers and sellers. And when it comes to a head and you break out of that pennant one way or the other, whatever army is doing the breaking, they're going to overrun the other army. And that's what's going on here in oddity. The entire life of the stock, because it was a new issue back here, the whole life of the stock is a pennant. Broke out of the pennant, pulls back to test. We actually bought it right on the 50-day moving average in the morning right here. This was on the 21st. In the morning on the 50, and it just blew out by the end of the day, and it was a new position in our portfolio. So we used a little day trading tool to get on that, and it blew out. We held it. But now what you're looking at are 3 white soldiers. So if you go read your candlestick charting textbooks, this is a textbook, 3 white shoulders. It's hard to find textbook anymore. It's hard to find a chart this clear. 3 white soldiers usually portends greatness. that should be a big stock from here. And then you look at the bigger picture of the wedge and it makes sense. So, we'll see where it goes. We'll see where it goes from here. This is an AI beauty story. It's using AI, the beauty and health space for women. My wife is using the product. She loves it. I don't know. She loves it. She thinks it's great. She thinks it's lots of fun. So there you have it. There's my research. In the meantime, I'm going to be trading that chart pattern. Everybody have a wonderful day on the trading desk. I know I will. I hope you have a wonderful day on your trading desk with me. I'm going to report subscribers. Any questions, throw it into the comment section. I'm happy to answer. And of course, guys, listen, part of the fun here is if you're looking for a sounding board, you want to chat and kind of refine your process, I'm here for you. Pick up the phone, 561-575-6832. Everyone have a great trading day, and remember to be the smart money.